Welcome to the Deep Dive. We're the place where we plunge into complex topics and really try to pull out those essential nuggets of insight for you.
That's right.
And today we're navigating a truly transformative landscape, the future of commerce. We're talking about, well, a seismic shift in how we handle our money.
Yeah, seismic is a good word for it. These aren't small tweaks.
Exactly. And it's driven by forces that are, already well in motion. We've put together a really powerful stack of sources for you today.
We have.
We've got everything from a groundbreaking Visa and IFTF report looking at the future of commerce, Capgemini's big world payments report,
A really comprehensive one.
and some really fascinating insights from a company called Pintopay. They're directly tackling that crypto-fiat divide.
Mm-hmm. Bridging those worlds.
So our mission today,
Yeah.
to quickly arm you with a clear understanding of how things like AI, open finance, and cryptocurrency are fundamentally poised to reshape how you buy, sell, and manage your money in the coming decade.
And like you said, this isn't just about incremental upgrades. What's truly at play here, and what's fascinating, is how these powerful trends are sort of intertwining,
Right.
creating incredible opportunities, for efficiency, access, inclusion, but also, and this is key, introducing complex new challenges, things around trust, privacy, security.
Oh, absolutely.
So we'll explore what's driving these changes and, crucially, what they actually mean for you, whether you're listening as a consumer, managing personal finances, or maybe running a business trying to navigate this new commercial reality.
Okay, let's kick things off with something that honestly feels a bit like science fiction becoming everyday reality. The rise of AI agents in our financial lives.
Yeah, this is a big one.
One of the most compelling insights I thought from the Visa and IFTF report is that we're moving beyond just adapting to technology. Now, technology is actively adapting to us.
That is a profound shift, isn't it? Think of it not just as using digital tools, but as having a truly autonomous financial partner.
Autonomous, like really making decisions.
Potentially, yes. We're talking about personal digital financial advisors, available 24/7, woven seamlessly into your daily life,
Wow.
and customized to your specific needs, your goals.
Yeah.
Imagine an AI assistant that, chats with you in your preferred accent, understands your financial aspirations,
Okay.
and then proactively guides your decisions. Sometimes, maybe without you even needing to ask.
That vision of autonomous agents is, well, it's striking. The report gives some really vivid glimpses of how this might play out.
Yeah, those examples were good.
Right. Picture Lynn's autonomous car not just driving itself, but seamlessly handling tolls and charging as it cruises across Europe. Or Mike's smart home proactively detecting an issue with his water heater and just scheduling the repairs without him lifting a finger.
Saving him time and hassle.
Totally. Or even Mira's personal AI assistant detecting wear and tear on her car and then acting as her proxy to negotiate with mechanics, schedule everything.
See, the core insight there is that AI isn't just crunching numbers anymore.
Right.
It's handling the complex logistics of our lives and our assets.
And it's not just for us as individuals, is it?
No, exactly. What's fascinating is the report indicates they'll be adopted by banks, for better customer service, maybe by governments to ease regulatory friction, and extensively by businesses for just day-to-day operations. This really heralds a massive shift from what we know as digital finance towards agentic finance.
Agentic finance.
Yeah, where success depends less on, say, deep financial literacy and more on really fluid human-AI collaboration.
So it changes the game from us managing finances with tech.
To tech actively managing our lives and assets for us. It's a different paradigm.
That sounds incredibly convenient, potentially revolutionary even. But, with any powerful new tech,
There are always risks.
there are always risks. The report is pretty clear, warning about malicious AI agents targeting vulnerable people with incredibly sophisticated scams.
Yeah, deepfakes, personalized manipulation.
Yeah.
That's scary stuff.
Potentially maintaining deceptive relationships over long periods. And then there's the complex question. Who's responsible when these early AI systems make mistakes? Or generate false info?
Or when a transaction goes wrong. Yeah.
It really begs the question, how do we build trust into such an automated, AI-driven financial world?
That's the million-dollar question, isn't it?
Okay.
And it leads us right to what the Visa and IFTF report calls the trust principle.
Okay.
As our identity and financial lives spread across smart devices, intelligent networks, these advanced trust networks become absolutely vital.
So what are these networks, like practically?
Well, think of them as layers of protection. You've got watchdogs verifying who you claim to be across all your devices. Then safety nets designed to catch AI discrimination or, rule breaking before it impacts you.
Right, proactive.
And digital bodyguards meticulously securing every single money transfer against ever-improving hackers, even those using quantum computing down the line.
Wow. Quantum-proof security.
That's the goal. And the critical need here is transparency in how these AI systems work, because their algorithms can often feel like black boxes, right?
Definitely.
So this principle helps ensure the system stays accountable, trustworthy, even as it becomes more autonomous.
Okay, so AI agents are redefining how we interact with money and assets, but there's this parallel revolution happening in how money itself moves.
Absolutely. Driven by open finance and instant payments.
And the Capgemini World Payments Report, it really highlights the speed of this. Non-cash transactions surging globally, projected to reach nearly 2.8 trillion by 2028.
It's a staggering number.
Yeah.
And Asia Pacific is just leading the charge, a projected 17.7% annual growth.
Yeah.
That's huge.
2.8 trillion. It's hard to wrap your head around. It really indicates this profound shift away from physical cash towards these digital interconnected ecosystems.
You're absolutely right. And connecting this to the bigger picture, open finance is really the next step from open banking. It's broader.
How so?
Well, it aims to encompass all aspects of your financial life insurance, investments, mortgages, maybe even pensions. The goal is giving you a comprehensive 360-degree view of your entire financial footprint.
Okay, so I can see everything in one place.
Exactly. Empowering you with highly personalized products, streamlined management. Countries like Brazil with its PIX system
I've heard about PIX, yeah.
and India's account aggregator framework, they're really showing just how transformative this can be. PIX in Brazil settled, get this, 42 billion transactions worth $3.5 trillion in 2023 alone.
Wow.
It's 247, free for individuals, and remarkably, something like 75% of the population was using it by mid-2024.
That kind of adoption is incredible for financial tech.
It really is. It shows the demand is there when it's done right.
So beyond just the speed, what are some of the maybe surprising new capabilities or shifts in behavior for consumers and businesses that these instant open systems unlock? Things that just weren't possible before.
That's an excellent question. Because the real power isn't just faster transactions, although that's nice.
Yeah.
It's about entirely new ways to manage money. For individuals, we're seeing much better defense. Personal finance management tools, PFM, aggregating all your accounts onto one smart dashboard.
Okay, that's useful.
Plus things like instant pre-approved loans based on your real-time financial data. And for payments, A2A, account-to-account payments, are really starting to challenge traditional cards. Lower fees, immediate settlement.
And for businesses, what's the impact there?
Oh, huge. Game changers like instant working capital. Bulk payments that clear in seconds, not days, even instant tax payments. The profound insight here, I think, is that the real power isn't just speed. It's about unlocking billions in trapped corporate capital. It fundamentally reshapes how businesses manage cash flow, making them much more agile.
That sounds like an absolute dream for cash flow, especially for, say, small to medium-sized businesses.
Definitely.
The Capgemini report mentions how corporate treasurers face these huge challenges, right? Nearly 7% of revenue often tied up because cash management is inefficient, or they rely on short-term loans.
Exactly. That massive drag on growth.
So these new solutions could make a real difference. You mentioned that example. A car workshop sends an e-invoice with a request to pay, an RTP, straight to an insurance firm, gets an instant claim payout. It just eliminates weeks of waiting.
Yeah, no more chasing invoices, no more waiting for the check in the mail, so to speak. That's a huge shift where cash flow is king.
It really is.
And solutions like e-invoicing, RTP, combined with instant payments, they drastically streamline collections, reduce delays, maybe even facilitate early payment discounts. But you raise a critical point.
The trust and security bit again.
Exactly. With so much data flowing, money moving instantly, what about those challenges? The Capgemini report notes nearly all payment execs are concerned about instant payment fraud.
That's a serious concern, especially with AI getting so sophisticated. What's being done? Are regulators in the industry stepping up?
They are, but it's an evolving threat. The rise of sophisticated APP scams, authorized push payment scams.
Right, where you trick someone into sending money.
Precisely. Often using AI-powered impersonation now. It's a serious issue. But regulators are responding robustly. The UK, for instance, is bringing in a mandatory 50-50 liability split for banks in these APP scams from October 2024.
So banks share the burden now.
They do. It incentivizes them to improve prevention. And crucially, the EU's proposed PSD3 directive.
The third payment services directive.
That's going to mandate confirmation of payee or COP verification, basically checking the account name matches before the payment goes through. A simple but effective check.
That makes sense.
And we're seeing advanced tech solutions too, like the U.S. Federal Reserve Scam Classifier, an AI tool designed to proactively spot and stop fraud before it happens by learning from huge data sets.
So it's a mix of regulation and smarter tech.
It has to be. That combination is absolutely essential to maintain trust in these faster systems.
Okay, so we've seen this revolution inside traditional finance, AI, open systems, instant payments. But what about that alternative financial universe? Cryptocurrency.
Yes, crypto.
Is it finally ready for prime time? Is it becoming a real part of this future commerce picture? Because, for years, mass adoption faced hurdles. Acceptance. Volatility.
Big hurdles, yeah.
And that's where a company like Pintopay comes in, based on your sources.
That's a key question, and it's really fascinating how Pintopay is directly addressing those friction points we just mentioned. Their core mission, it seems, is to bridge the crypto and traditional finance worlds.
How are they doing that?
By offering a gateway for issuing virtual and physical crypto cards that work seamlessly with Visa and MasterCard.
Ah, so using existing rails.
Exactly, at over 130 million merchants globally. This effectively makes your crypto spendable like any other currency anywhere you see the Visa or MasterCard logo. That removes a massive barrier.
So you can basically spend your Bitcoin or whatever like regular money, integrated with Apple Pay, Google Pay?
That's the idea. And the sources mention features like multi-crypto wallets supporting Charon, Toan, others, and direct crypto processing. So instant conversion of, say, USDT stablecoin to US dollars for spending. They even offer online banking via a Telegram mini app for quick deposits and withdrawals. It really does seem like they're trying to make the crypto part invisible, in a good way.
Yeah, focusing on the utility, the spending, not the complex tech underneath.
Precisely. The goal is convenience, reliability, and that global reach over 180 countries mentioned. And crucially, they emphasize security.
Which is vital for crypto.
Absolutely. Advanced encryption, multi-factor authentication, rigorous KYC/ML checks.
Know your customer, anti-money laundering.
Yeah, through partners like SumSub. Their data is hosted securely in Germany, daily backups, real-time fraud detection. Plus, importantly, the fiat balances are safeguarded under partner card issuers' EMI regulations.
Electronic money institutions, so there's that traditional protection layer too.
Exactly. That comprehensive approach is vital for building trust, especially given crypto's history with volatility and security scares.
And it's not just for individual users, right? Which seems important for wider adoption.
No, that's a good point. They offer white label solutions for businesses, meaning other companies can use Pintopay's infrastructure to issue their own custom-branded virtual and physical crypto cards.
Ah, okay. So like a bank offering its own crypto card powered by Pintopay.
Could be, or any FinTech, really.
Yeah.
It lets them offer crypto payment solutions under their own brand, opens up new ways to make money, build loyalty, and lets customers top up cards using both crypto and regular fiat currency seamlessly.
That really broadens the playing field, makes crypto much more accessible for businesses to offer.
It does. It integrates it more tightly into the existing financial ecosystem.
Okay, so as we look at this whole rapidly evolving landscape, the AI agents, the instant open finance, the bridging of crypto, what does this all mean for the traditional players, the banks themselves? Are they actually ready for this payment revolution, or are they, playing catch up?
That's a critical question. And the Capgemini report, well, it indicates a pretty significant readiness gap across the industry.
Really? How so?
While a lot of payment execs, 78%, believe their banks are in the inception stage for instant payments, planning or piloting.
Right. Thinking about it?
Only about a quarter, 25%, can actually receive instant payments today. And get this, a mere 5% of banks globally scored high enough on both business and technology readiness to be considered leaders.
Only 5%. Wow.
Yeah. And European banks, interestingly, seem to be lagging a bit in tech preparedness compared to APAC in the Americas.
So it clearly suggests many traditional institutions need to seriously accelerate their digital transformation.
Dramatically. Or risk being left behind by nimbler fintechs and payment innovators who are building for this future now.
So if you're running a traditional bank, sticking your head in the sand isn't an option. What's the strategic playbook? How do you navigate this?
Well, A key takeaway from Capgemini is the absolute necessity for a multi-rail payment strategy.
Multi-rail, what does that mean?
It means not just picking one new payment method, but integrating various payment rails, everything from traditional cards and ACH
The old bank transfer system?
to instant A2A payments, maybe even CBDCs, central bank digital currencies, down the line, all into one unified, intelligent platform.
Okay, so offering everything, basically.
And making it smart. Think of Bank of America consolidating 5 different apps into one, or MasterCard and Visa expanding their networks to handle instant payments beyond just their card rails.
Leveraging their existing reach.
Exactly. It allows for intelligent, dynamic routing of payments. The platform chooses the best rail, fastest, cheapest, most secure for each specific transaction, maximizing efficiency and customer choice.
And it's not just about the payment mechanics, is it? There's this idea of marketplace banking emerging.
Yes, that's a powerful model. Banks becoming experience aggregators.
So connecting customers not just with their own products, but with a whole curated ecosystem of third-party services, like a one-stop financial shop.
Precisely. It's about monetizing the entire customer journey, not just selling siloed banking products. It's shifting to creating a holistic financial ecosystem around the customer.
Do we have examples of this working?
Oh, yeah. Starling Marketplace in the UK is a good one. Revolut's global approach, offering everything from travel to crypto. Or Nubank's Marketplace in Brazil. These show how it drives deep customer engagement, makes them sticky,
Keeps them in your app.
and unlocks entirely new revenue streams. This ability to combine the smarts of open finance with instant payments offered across multiple rails, all within an integrated marketplace, that's key to creating real innovative value for customers going forward.
Wow. What a deep dive today. We've really covered a lot of ground.
We have.
How AI is creating this future of personalized financial agents acting on our behalf.
The agentic finance idea?
How open finance is giving us that 360-degree view of our money, supercharging business cash flow.
Unlocking trapped capital.
And how companies like Pintopay are working to make crypto an everyday reality, bridging that gap.
We're truly at a pivotal moment in commerce, I think. The future of payments is undeniably instant, it's interconnected, it's open, driven by these powerful intertwined forces we talked about.
Yep.
For you, the listener, understanding these shifts means being prepared to interact with a financial world that's faster, more integrated, and potentially far more efficient and empowering.
Absolutely. So whether it's your autonomous car paying its own tolls seamlessly, or your smart home proactively scheduling repairs and paying the invoice automatically, or maybe just swiping a card backed by crypto for your daily coffee, the way we manage money is changing at light speed.
It really is. Convenience, yes, but also this deeper level of automation and integration into our lives.
But the challenge remains.
The big challenge, ultimately, isn't just about adopting the shiny new tech. It's about ensuring that all this innovation builds robust trust networks. Networks that are transparent, secure,
Right.
and that it genuinely promotes financial inclusion for everyone, everywhere, not just creating a faster system for those already included.
That's a crucial point. And that, for you, is maybe something to mull over. How might you personally leverage these emerging trends, these AI agents, these open financial insights, maybe even seamless crypto payments? How can you use them to gain more control, more speed, more insight into your own financial life? Where will you find your advantage in this rapidly transforming financial landscape?